everybody. Hope you're all doing well. It's Lane here with MetaShackle. Currently, if you haven't noticed, the crypto markets are super deep in the red. There have been a lot of liquidations, a lot of panic selling, and it seems like for the vast majority of people that are currently holding crypto or watch the crypto markets, people are increasingly becoming more and more bearish. And as I've said in some previous videos recently, there's really not a lot to be bullish about in the current market. Especially with the stock market pushing at all-time highs. The precious metals markets have gone on an incredible run, more than doubling. With the housing market in trouble, the job market in trouble, auto loans in trouble, it's getting harder and harder to find even the most minute reason to be bullish about anything in the current environment. But let's go over some of these charts and see what we see. And let's not waste any more time and let's get into the video. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. Use the coupon code NOVA for 50% off of your first month membership. This applies to all 3 tiers. Now, first off, just kind of taking a glance at the market overall, we can see that the indices were kind of split, with the Dow down about 0.5%, the NASDAQ up about 0.5%, the Russell 2000 basically breaking even, and the S&P 500 with a small gain at about 0.17. We can see the dollar is holding pretty close and has been very strong recently, holding right around that $1 level, which really is kind of about where it should be if you think about it. The VIX has been down just a little bit. Silver and gold have been correcting for the last week or so, but are still sitting at incredibly high prices, and I think there's a lot more to gain in this regard. Certainly not going to happen overnight, but in the current environment, holding gold and silver is most likely one of the better places that you could be, especially if you got in early. Oil is still very weak, and we all know why that's happening. But looking into the cryptos here, Bitcoin down about 4%, BNB down about 8.5%, XRP at 9%, XLM at 888s, Algo at 11. We've got Sol down at 11. Even with all the good news in regard to the ETFs, HBAR is still down 10%, which just goes to show you how much these ETFs just add hype to the market. And I personally don't believe that these ETFs are really a good thing for crypto, as anytime you add derivatives to any market, it just gives the powers that be more power to control and distort market pricing. But that's just my opinion. ADA down 10%. And just going down the list, we can see that Telcoin has just been getting the heck kicked out of it, which is great news for me because I've been buying a little bit every single day, continuing to build my position, and I will continue to do so. ZBCN is down at about 11.5%. IOST, another one I've been watching for a while, got hammered at about 12.25%. And XCN literally getting the pants kicked right off of it at about 15%. There's Tesla just chugging right along. It really pays to be a good boy for the elite, doesn't it? We all saw what happened to Tesla when Elon was running his mouth too much and the price was just getting hammered. But all of a sudden he falls back in line and Tesla suddenly starts to see incredibly high stock prices. What a weird coincidence, huh? And I think at some point in the future, I don't know when, but I've always believed that at some point MSTR is going to get to the point to where it's so incredibly over-leveraged, even more than it is currently over-leveraged, that at some point the big dogs are going to gang up and go after them. Just imagine what would happen to the price of Bitcoin if Bitcoin dropped down below the average buy price for MSTR, causing it to forcibly liquidate its positions to cover all of those margin calls. We would see such an incredible chunk of Bitcoin transferred right over to the elitists. It would absolutely destroy MSTR. I'm not saying it's going to happen, but if it did, it would not end well. Now jumping over and taking a look at the XRP chart, this is the daily chart. We can see that we've had this incredible liquidation candle right here today, which has pushed price pretty deep into this area that I'd been discussing in my previous videos. Previously, I had been talking about this candle right here, with price potentially trading down into this general area right here, generally staying within the body of the candle, but it can trade within anywhere on either side of the wick of that candle. But generally, most of the action is concentrated right in the area of the body. We can see see that price has pushed down right into that general area, wicking slightly past it. Now, if we were going to see a reversal with XRP, this, as a trader, is the area I would be looking for that potential reversal. There's certainly no guarantee that price is going to bottom out here and reverse, but this is the area that I've been watching for since price was trading up in this area here. Now, if I expand the chart, still staying on the daily chart, we can see the last time this iteration of this particular type of candle formed was right here, with the area of the body of the candle outlined in yellow, exactly like we're seeing here where the current price is trading. Now you can see in this case, price came down, pushed a deep low, which in this case was actually the pattern low after setting the previous all-time high, which was right here at that time. Price then traded up here, getting into the area of this weak doji, which I will zoom in so you can see. It's funny how the weak dojis always have some say in this. But you can see the weak dojis right here. Price traded up right into the general area of those weak dojis. Once price started to correct, it came back down, wicking right into that same area outlined with this dragonfly doji right here. After this occurred, we saw an incredible move to the upside, coming from that low in that area there up to this high, which was roughly 90% gains over the next 26 days. Now, the current pattern that we're seeing is very similar to that. That doesn't mean that we will have the same result, and there's no guarantee that the current price action will follow what we saw in the past. If price does break through this and continues to push to the downside, the next candle that I would be interested in watching would be this particular candle right here, which would basically build us another box sitting in this area right here, which would basically be centered right about that $2.04.5 range. But this would be the area I would personally be watching if this area does not hold. And it's funny because when you watch a lot of traders on YouTube, they're looking for support and resistance levels. But in my style of trading, I'm actually watching candle bodies of specific types of candles. Now, when this iteration occurred, if you remember watching my videos from the past, we were keeping an eye on this reverse dragon pattern that formed right here. Once the head had formed and price pulled back down, I had actually called out this candle being the potential area for price to visit back when the price was trading up this direction. Now, of course, you never know exactly when it's going to occur, but I called this out well in advance, and you can go back and watch those videos and see that. But this certainly isn't about ego, it's just about the fact that this particular type of candle acts as a nice drawn liquidity and a great trade setup if you know how to recognize them ahead of time. But the one thing that definitely worries me about the current iteration of what we're seeing here is not only how it's slightly pushed through this box area, but another thing that leads me to believe that this could potentially fail, pushing price down into this area, is when we jump over and take a look at the liquidation heat maps. We're currently looking at the 1-month chart. The thing that you'll notice with this chart is the vast majority of the available liquidity sits on the sale side and is above current price. When we look where the current price is trading now, there's very little liquidity below the current price. And when we look down in this area on this particular chart, there's basically nothing. Now, the reason why this would be such a major concern is because if we saw a ton of large sell orders step into the market right here, there are no buyers to match the sellers. So in cases when that occurs, say we have people stepping in and the orders that they're attempting to sell equal $200 million, but there's not $200 million worth of liquidity available below the current price. What we would see is the price pushing down further and further and further to try and get a draw on sell-side liquidity in order to match the buyer and the seller. But since there is no liquidity down here, we could very well see another flash crash just like we saw earlier when this candle formed. And as we now know, was absolutely intentional because right at the time this cascade started to occur, the market makers and the exchanges pulled all the liquidity out of the way to allow this collapse to happen. Now, the same thing that occurred, which caused this collapse right here, could absolutely occur right here if enough sellers step into that same area where there's no liquidity. I'm certainly not saying that that's going to happen, but right now the potential for it to happen absolutely exists. So if you don't have your low limit buy orders set and staggered in a nice ladder, as I spoke about in my last video, now might be a good time to get them in place, just in case. But when we jump over to this liquidation map by CoinOnk, we can see that the available liquidity is resting right down in this area. Once we get past the blue here, it starts to get fairly thin to basically non-existent in comparison to the amount of liquidity resting on the buy side above current price. The vast majority of the liquidity is above the current price. Although this particular heat map does allow us to kind of dial in here a little bit more and see that there is some available liquidity resting in this range till we get down in the range of about that $2, 4.5 cent range that I was talking about previously, with the formation of that additional yellow box right here. Now flipping over to my standard daily chart, which is one of the charts I release every Sunday on my Patreon. The other thing that concerns me about this particular chart is the fact that the price is now trading below the equilibrium zone. We want to see price trading above the equilibrium zone. But with price trading below, we can see down here that if price does start to collapse or cascade to the downside, we do have a bullish order block right here still remaining even after the flash crash here. But the only problem with that is it starts at right around that $2 mark, stretching all the way down here to about a $1.78 range. You can see when looking at this chart that price has spent very little time below the equilibrium zone since going back all the way to here on July 9th when it punched right through it to set the all-time high. As it sits right now, we are actually seeing this equilibrium zone in the red rather than the green. And when you look at these charts overall, you can kind of get an idea how my charting technique works. Once the price broke up through here, hitting the range of the red on the fib zones, broke back through, pushed down to the bottom range, pushed back up to the upper range, and now we're starting to break back through the equilibrium zone to the downside. Now, whether or not we are actually in a bear market or we are starting the beginning of a bear market, I personally have no idea. And with my particular strategy, I have had no plans to sell any of my crypto in my long-term holdings until somewhere around 2030, 2032, regardless of price. I don't care if the price is 10 cents. I don't care if the price is $100. They're long-term holdings for a reason. Although I do have some short-term holdings that I would consider selling under the right circumstances, but I'm not committed to doing so. If I don't like the way things are going, I may just add them to my long-term holdings and continue to hold them. But one thing's for sure, I'm not going to be selling any of my holdings in a panicked state. If price drops, then it can just go ahead and drop. And under the right circumstances, with the right assets at the right time, I'll just accumulate more. But I went into this knowing that there was a chance that I could lose every single dime that I've ever invested in cryptocurrency. And at this exact moment, right here, right now, I am still willing to lose every single penny. I don't get emotional about my trades. I don't get emotional about my holdings. I don't get concerned when price is going down. And I don't get super excited when prices are going up. Obviously, I would much prefer to see prices moving up. But from an emotional standpoint, I really don't let it get to me. I don't know if that's just because I've traded for many years or if that's just because that's the type of person that I am. But even during the flash crash, sitting here watching this huge candle just develop and push all the way down here with everybody wondering what in the world's going on here, it literally invoked zero emotional response to me. I was actually more intrigued about what was going on than I was concerned. But crypto has a way of playing your emotions like a fiddle. And no matter what happens, no matter what you're doing, it doesn't matter what I say, it doesn't matter what anyone else says. Stick to your strategy, stick to your plan, and don't let anyone tell you otherwise. I don't care what anyone else is doing. I've got my plan and I'm sticking to it. and no matter how it ends up playing out, I will own it. Be very wary of putting any of your crypto in any kind of a situation where it could be taken from you or liquidated. Do not borrow against it. And if you're going to trade, make sure that you're trading responsibly. I would recommend sticking with spot, but ultimately, the true value is going to be in having the coins themselves. So whatever you do, be very careful. And if you would like to trade spot, or if you're just looking for a place to save some coin by swapping your cryptos for zero fees, take a look at BitUnix. BitUnix is the only place that I trade crypto, and it's where I swap all of my cryptos. So check it out. You'll be glad that you did. So thank you so much for watching. I appreciate each and every single one of you. And regardless of what happens in the short term, what happens next week, keep your eye on the prize, because the best is yet to come.